So let's just have a quick overview of this summary. I'm not going to talk all the way through it because obviously it basically goes over everything that's in the entire chapter. What I would recommend that you do with this is you yourself go through and think, does it give you enough detail? If you go through this and look at it and you think, yeah, do you know what? That tells me all I need to know about intangibles, then that's great. If, however, you read a little square and you think, not sure what that's going on about, then that's when you need to maybe delve more into your workbook and do some more studying on it. So remember we started off looking at those definitions and the recognition aspects, and we said those are probably some of the most examinable bits that you're going to get. Your true understanding of, do you have an intangible? How do you decide you have an intangible? And at what point do you recognise it in the statement of financial position? Okay, so we looked at all the definitions, and those are probably the key, the most important bits that you've got from the highly examinable nature of this part of the syllabus. And then we looked at how do we obtain our assets? Well, we either make them ourselves, don't we, or we buy them. And remember, we said with those acquired intangible assets, something you've paid for, there is a presumption that the recognition criteria are met, whereas with your internally generated assets, we said you had to prove that those recognition criteria would be met. So with the intangibles that are acquired, remember we looked at the idea that we presume the recognition criteria are met, and then we looked at the treatment of what if you buy it separately, you capitalise it at cost, plus any directly attributable expenses. If you acquire it as part of a business, you recognise it at fair value. And then with our goodwill, remember we said, again, there's two bits. If you buy some goodwill when you purchase another business, that's fine. It's acquired intangible, so you can capitalise it. If you generate the goodwill yourself, then you are not allowed to capitalise that. Then your internally generated assets, remember this is picking up from what you've done at your previous level, mainly looking at the idea of research and development. So do make sure that you are happy with the pirate criteria, that you know when you can capitalise your intangible. And remember, when you meet that pirate criteria, you have to meet all of the criteria. And when you do meet it, it's a case of you must capitalise. It's not an optional treatment. You have to capitalise that treatment. And remember, there are certain things that we saw, things like brands, publishing titles, customer lists, those types of things, that because of their unique nature, you are never going to be able to capitalise those. And then we looked at our initial and subsequent measurement. And remember we said essentially they are almost identical to your normal bog standard property, plant and equipment. Just be careful about the type of expenses that you capitalise. Like for example, intangible asset is unlikely to have a delivery charge, is it? But certainly any costs necessary to get the asset ready for its intended use, or any directly attributable costs, that's fine. You can capitalise those. And then in our subsequent measurement, remember we looked at the idea again, same as PPE, you can either keep the asset at cost, less amortization, or you can revalue to fair value. Remember, revaluation is actually very rare. You have to have an intangible asset that is traded in an active market before you can revalue that intangible. And again, your treatment, whether it's at cost or whether it's the revalued amount, is exactly the same as for your PPE. And then your amortization and impairment. Amortization, same rules as you had for your depreciation. With your impairment, remember, you had the situation where if an asset has been impaired, you should do an impairment review. But you also had the situation where you possibly had an intangible asset that was deemed to have an indefinite life. And in that case, you do have to do an impairment review every single year to make sure that that asset hasn't become impaired. Because remember, if you've got an indefinite life, you're not amortizing the asset. And then derecognition, again, exactly the same as for PPE. At the point where you've either disposed of the asset, so sold it on to somebody else, or it will generate no future economic benefit. So for example, a license has run out, those type of things, they should be derecognised. And again, you're going to have a gain or loss on derecognition, exactly the same as for PPE, calculated in exactly the same way and treated in exactly the same way.